What's the difference between PPO and HMO? An HMO is a health maintenance organization, and PPO is preferred provider organization. So, one, knowing the names of them. But these are two of the most majorly talked about medical plans. So when you're selling, so this kind of goes back to the idea of what can I do with my health insurance license? You can sell people HMOs and PPOs. You can sell them government-based HMOs and PPOs, either in the medical realm or the Affordable Care Act realm. So you can explain this information. A PPO is where you can go to any doctor, any place, anytime, doesn't matter who knows about them or whatever. You pick and choose your doctor, doesn't matter. You will be helped with paying that bill. They may not cover 100% of the bill, but they will cover some of the bill for you to go to any doctor. HMO says they will cover the entire bill, but you're only allowed to go to certain doctors. You cannot go to other, we'll pay for everything. All you have to pay is your premium, and we will pay for every doctor, every hospital. You will not expect another bill with an HMO. It's very rare to have another bill. A PPO, you're likely to be billed and you're likely to have to pay 20 to 80%, 20 to 60, 50% of your medical bill. And so an HMO says you have to go to certain doctors. You're only allowed to go to certain doctors. There are some doctors if they're in the HMO, you can go to them. But if there are doctors that are not part of the HMO, they will not cover a damn thing. They will not pay for anything. A PPO allows you the freedom to go to another doctor that is not in network, but they will only pay a portion of the bill. In an HMO, they will pay the entire bill, but you're only allowed to see their doctors. So you can't be picky or choosy in an HMO. But it's the cheapest because you pay one monthly premium. That's all you really pay. You pay a little copay. I'm sorry. When I say you never paid again, you do pay again, but you pay a little copay. Like you pay a set amount for a certain thing, but you barely have to pay money after the premium, or you're less likely, or not a lot of money after you pay the HMO premium. On the test, the way that the HMO shows up is that they will ask a question like, what is the purpose of an HMO? Everything related to why they do an HMO, like why is an HMO important? Why do they offer HMOs? What does HMOs care about? It's all about preventative care. So an HMO, one of the reasons it's so cheap is because they require that all the doctors make sure you stay healthy, that you're doing things that help prevent you from getting sick. So an HMO is all about preventative care. Like for women, you have these annual, doctor's appointment, a woman's wellness exam, where they check your cells in your uterus to make sure that everything is good. And like you don't have a problem, but you're going in to check to see if there's a problem, like preventative care. You're checking in on things before something pops up. Just like dental, you do that with dental. Medical hardly is like, while they do like a 1-year wellness check, they're not like every week, like what's going on with her body, what's happening with their body. They only check it, once a year on a medical plan. Dental say, let's check it every 6 weeks. We want to catch something sooner rather than later. We want to know if something is there. With medical, it's kind of like, come in if you feel something, but we probably don't need to see you for a year, maybe 2 years, as long as nothing pops up. Like I know they've changed some of the rules with when with a gynecology test, when do they check all the cells and all that stuff. Like that's one of the things that's automatically covered on your HMO is a women's wellness checkup that you'll never have to pay. You don't even pay a copay for that. So like some on your HMO, you'll have to pay $500 when you go to the emergency room. That's a copay. Like you pay a set amount every single time you go. You know exactly what it is. That's a test question deductible. A deductible is a set amount of money. I know exactly what it is. If I go through this procedure, I'm going to pay that exact amount of money. It doesn't fluctuate. There are different deductibles. Like you may have an emergency room deductible, and you may have like a, what are they called when it not chronic? What is it called when it's urgent care, right? They may have an urgent care deductible versus an emergency room deductible. They may have a deductible for like surgeries or different types of surgeries, but it's still a set amount. You know exactly what it is. All they do is say, okay, this surgery or this procedure, this type of doctor, boom, it's this amount of money. And you can read the paperwork that'll tell you, if you ever go to a doctor for this amount of thing and this needs to happen, it'll be this amount of money. Like you know what it is you're going to expect to pay. With a PPO, it's percentage based. And so like if you go to a doctor that charges $1 million, you're on the hook for, $20 million of that. And there might even be another limit. Like there are limits within limits of a PPO. So They do cover a percentage, but there are still limitations. Like there might be an annual limitation to your insurance policy. So major medical plans. Oh, live ended. Will end in 5 minutes. Okay. I think I turned my live back on. On TikTok. I'm not very good on TikTok. I'm on the YouTubes. Check me out on the YouTubes. I'm definitely over there. Yeah. So that's the difference between an HMO and a PPO. So we talked about that.